Ladies and gentlemen, good day and welcome to the KDDL Limited Q4 and FY'24 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the belief, opinion and expectation of the company as on date of this call. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Yashovardhan Saboo, Chairman and Managing Director from KDDL Limited. Thank you and over to you, sir.
Thank you. Good morning, everyone. Thank you for joining us on the KDDL Limited Q4 and FY'24 earnings conference call. I hope everyone has had a chance to view our financial results and the investor presentation recently posted on the company's website and the stock exchanges. I am accompanied by our CFO and Executive Director, Mr. Sanjeev Kumar Mason, and SGA, our Investor Relations Advisor. I will start with a short introduction to the diverse businesses that KDDL encompasses. KDDL, which was originally Kamla Dials and Devices Limited, founded in 1981 and headquartered in Chandigarh, is a leading manufacturer of components for global watch brands and of high-quality precision stamped components for marquee international clients in the electronics, energy, aerospace, and automotive and electrical vehicle segments. KDDL's well-known subsidiary Ethos is India's largest and fastest growing retailer of luxury watches and other luxury accessories. In discussing our segment-wide performance, we start with the engineering segment and within that with the watch component segment, which includes dials, hands, indexes and bracelets. Revenue from the watch component segment grew by 10% from rupees 224 crores in FY'23 to rupees 247 crores in FY'24. The growth would have been higher, but we are witnessing a slowing down in the last quarter on the back of a market correction in watch sales in important markets like China, Europe and Middle East. The geopolitical strains in Europe and Middle East, the uncertainty in USA and sluggish Chinese demand predicts a subdued consumer sentiment for all discretionary products, including watches, over the next few months in these important global markets. Our export business in watch components is feeling this impact too. On the other hand, we are pleased to inform you that we have inaugurated our new plant in Bengaluru, which manufactures high-quality steel bracelets for watches. This is the first steel bracelet factory in India which is set up to serve international Swiss customers. This plant will only serve the mid and high-end Swiss and European watch markets. We have spent approximately rupees 35 crores to establish this plant with a capacity of 75,000 steel bracelets per year. Trial production and supplies have been made and received very well, and commercial production will start very soon. The additional revenue from the bracelets division will compensate the slowdown in the export market for the other watch components as mentioned already. The precision engineering segment, also known as Eigen Engineering, has shown stellar results and will continue to grow in a very, very ambitious and a very exciting fashion. Revenue for FY'24 stood at 95 crores, up 25% from rupees 75 crores in the previous year. The revenue growth is attributable to the higher share of exports, which is more than 70% of the total revenue. All business segments in our precision engineering business are witnessing good growth and the order position is strong. We continue to get inquiries and new RFQs of very encouraging dimensions for further expansion in the business. We will continue to focus on the export market primarily from Eigen. Our ornamental packaging segment, which caters mainly to the domestic market, has also witnessed a strong improvement in demand. Revenue in FY'24 improved by 18% to rupees 15 crores from 12.7 crores in FY'23. We continue seeking high-value premium quality customers in domestic and export markets. For this segment, we are establishing a new facility near Chandigarh with a capacity of 1 million boxes at an estimated cost of rupees 8 crores. With this new facility and the opening up of some new market segments that we are working on, we believe that the packaging segment will continue to show very handsome growth and develop into a 80 to 100 crore business over the next 5 to 7 years. Estima AG, this is our watch hands and dials factory in Switzerland. We are happy to announce that Mr. Michel Pauli, a very experienced technology and business leader, has joined as the new managing director of Estima. In addition, we have made several changes in the operating and leadership team at Estima. Revenue growth during the last year has been good and the loss has decreased, but we are still not profitable. With the many steps already initiated and in progress for improved capacity utilization and improved technical capabilities, we are confident that we will achieve profitability soon. But because of the unexpected slowing down in the Swiss watch business, this turnaround will probably be delayed by about a year. Silver City Brands AG, our Swiss subsidiary, it became our subsidiary, the subsidiary of KDDL earlier this year. Its equity capital was increased from CHF Swiss francs 2.1 million to Swiss francs 6 million. This company will be primarily engaged in the design, development, assembly and marketing of watches. You know that the company has already acquired the iconic Faber-Luba Swiss-made watch brand and plans to launch the revamped watches completely new collection during this year. The launch will be a global launch. Recently, KDDL sold a stake in Ethos Limited. We received approximately 193 crores from the stake sale, which includes about 122 crores from the stake sale in KDDL, and 72 crores as dividend income from Mayan Distribution Limited, which sold some shares of Ethos as well. This cash will be used for rewarding shareholders and for expansion and growth of the company. We expect our company to grow and continue to grow strongly as economic conditions improve and the consumption rises. I will now invite our CFO, Mr. Sanjeev Nason, and Executive Director to take you through the company's financial performance. Sanjeev.
Thank you, Mr. Sabu. Good morning, everyone. Initially, I will take you to the standalone financial performance of the company for the quarter 4. During this quarter, the total income rose by 2% to rupees 89 crores from 87 crores, which was reported in the similar quarter last year. EBITDA for the quarter is 30.4% and value is rupees 27.1 crores, as compared to rupees 22.9 crores reported in the previous year. EBITDA for the quarter improved by 4.3% on year-on-year basis. Profit before tax, before exceptional items during the quarter, is up by 27% on year-on-year basis to rupees 21.6 crores. Now, if you look into the full year financial performance, the total income is up by 15% to rupees 360 crores from rupees 314 crores reported in the previous year. EBITDA for the year grew by 29% year-on-year to rupees 102 crores in FY'24, and the EBITDA margin stood at 28.5%. Profit before tax, before the exceptional items during the year for the FY'24 stood at rupees 79.8 crore as compared to rupees 58.5 crores in the previous year, and witnessing a growth of 36%. Profit after tax, after considering sales stake, the shares of the Ethos which was sold by the company, as well as some exceptional impairment loss for the financial year 24, the PAT was 220 crores as compared to rupees 69 crores in FY'23. Moving to the consolidated performance of the company, during the quarter 4, the total income is up by 16% to rupees 357 crores from rupees 307 crores in the previous year. EBITDA for the quarter grew by almost 42% year-on-year to rupees 70 crores in quarter 4 FY'24. For the quarter, the EBITDA stood at 19.6%. These EBITDA numbers are with the Ind AS impact. And the PAT for the quarter stood at rupees 34.8 crore as compared to rupees 21.7 crores reported in the previous year, witnessing a decent growth of 64%. Now I move to the full year FY'24 financial performance at a consolidated level. The total income of the company is higher by 25% and recorded a revenue of 1,420 crores compared to 1,139 crores in FY'23. EBITDA for the year grew by 53% year-on-year to rupees 270 crores, and EBITDA margin stood at 19.5%. PAT for FY'24 was 137 crore as compared to rupees 77 crore in FY'23, and recording a growth of 79% on year-on-year basis. During the year, KDDL manufacturing units spent almost 39 crores on the capital expenditure. This excludes the capital expenditure by the ethos for the growth of the business. And during the current running year, we envisage a capex around 45 crores for all our businesses. During the year, the last board meeting yesterday, the KDDL has announced a final dividend of rupees 4 per equity share. This is subject to the approval of the shareholders at the ensuing annual general meeting. And this is in addition to the interim dividend of rupees 58 per share paid in January 24. Post this dividend, we have an investable surplus of around rupees 100 crores, and which is planned to be utilized for the growth and development of the company, including finding ways for rewarding shareholders. With this, I open the floor for question and answers, and I request all the participants to restrict the questions mainly to the KDDL manufacturing business. Thank you very much. Now the floor is open.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rohit from SK Securities. Please go ahead.
Hello. Good morning, sir.
Good morning.
So I have a couple of questions, and firstly, congratulate on the good set of numbers. So my first question is, we have recently started the bracelet division. Can you please throw some light on this division and how we will move ahead, and also this regulated by Swiss regulation?
Sorry, you said the bracelet division?
Yes, bracelet division.
Yes. Okay. What are your other questions, Rohit?
My second question is, apart from bracelet, what else can be considered as a new segment? So what are our endeavors for other new segments, if we have any?
Okay.
Yeah.
Anything else?
No, that's it.
Okay. So, Rohit, bracelet refers to what is sometimes called as the metal band, and there are various types of metal bands. At the highest quality level, which is what we are making, these are made from solid steel, and the steel blocks are machined out of a profiled rod, and then they are polished. It's a very highly specialized nickel-free steel which is used, and the bracelets that we are manufacturing now in our bracelet division are destined for the high to the very high quality brands in Switzerland. 100% of the production will be exported. We have a capacity of 75,000 bracelets per year. It will take some time to reach this production level and sale, because there are two reasons for that. There is a very high level of skill involved in the final finishing of the bracelets, and that takes time to acquire. And second, every design of a bracelet requires a large number of tools and jigs to be prepared. So there's a learning curve that is involved in setting up this bracelet, and it's coming to the production of 75,000. This also means that it's a business with a very large moat. As I mentioned in my speech, it's the first time that a steel bracelet factory is being set up in India for the Swiss market, and we certainly expect it to be very, very successful. Most of the Swiss brands, the largest production and purchase is from China, and this factory is one of the consequences of the wish of many brands to establish a production base outside China. This is the so-called China Plus One policy, and we have obviously benefited from this, and we will continue to have more business coming our way. As far as your second question about what else can we do, there is a whole bunch of components in the watch field which we could produce in the future. The watch case is a very obvious one. Watch case is the housing of the case that contains the movement and the watch. Again, for the export quality at high quality levels, there is no manufacturer in India. Most of the manufacturers are either in Switzerland or in China, and a few of them in Thailand. So I think there is a pretty significant scope in the watch case business as well. And then there are other smaller components which could be movement parts, which could be case parts like the glass on the top, the crown on the side. So there is a large scope for watch component manufacturing in India. And as brands want to shift a bit of their dependence away from China, there will be a large scope for expansion of this.
Understood, sir. So the China Plus One strategy will play out well. Okay, that's the crux. Okay, thank you, sir. That's it from my side.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. The next question is from the line of Ashir Jain from Jain Capital. Please go ahead.
Yeah, hi. Good morning. So a couple of questions from my side.
Sorry to interrupt you, sir. May I request you to please use your handset?
Is this audible now?
So you're sounding
It is.
Okay.
We can hear you.
Okay, sir.
Okay, sure. Thank you. So yeah, a couple of questions from my side. So firstly, just wanted some color on the hygiene division recent update. So where are we on the order book? Any particular amount of orders in pipeline? And what is the plan on expansion in this segment?
Okay. Any other questions?
Second question would be, what would be the current capacity utilization of dials and hands segment, and any expansion on that front as well?
Okay.
Yeah, that would be all from the.
Okay, right. So let me answer the Eigen question first. Eigen order book, as I mentioned in my speech, is very strong. We have diverse clients, marquee clients, especially in the export or deemed export segment, and the order book for existing products as well as new products and RFQs for new products is strong, and we expect to continue to grow in a similar fashion as we grew last year. As you know, we grew by about 25%, and we believe that it should be possible to maintain this kind of growth rate in the 20 to 25% range on a CAGR basis for several years to come. So we have a strong order position. And of course, then to serve this, we will need to expand capacity. This year already there is a planned expansion of space. This is planned in the same premises that we already have, but we will be expanding the factory space with some new construction and some new machines. And this expansion program is actually, we've planned something over the next couple of years, because it will have to be a continuous expansion as the demand increases. We foresee demand in the precision stamp segments to grow pretty steadily, both in the export and in the deemed export segments in India. As far as the dials and hands is concerned, we have, it's a little difficult to give a clear figure of a capacity over here, because a lot depends on the type of dials and hands that we're talking about. There is a huge diversity in the type of hand. The hand can go from, a price which could be as low as 50 to 60 rupees for a dial up to as high as 5,000 rupees per dial, or even higher in some cases. depending on the complexity and the quality level and the quantities, the lot size. So in this situation, it's difficult to give you a plain number of the capacity. However, I can say that for the highest quality levels, we currently have been operating at close to full capacity. In fact, in the previous year, in the beginning, it was even higher. There has been a slowing down now, so some spare capacity is emerging. There is no expansion planned as such, but a modernization and inclusion of some new technologies is definitely planned. New technologies will include technologies involving lasers, including new methods of surface treatment, so that we remain ahead of the curve. We remain at the cutting edge of technology and design in dials and hands. That is the ambition.
Sure, sir. That's helpful. Yeah, that's all.
Thank you.
Thank you.
Thank you, Asha.
Thank you. The next question is from the line of Ankush Agrawal from Surge Capital. Please go ahead.
Yeah, hi sir. Thank you for taking my question. So the KDDL has recently bought a majority stake in Silver City brands, wherein it has said that KDDL will bring the manufacturing excellence for the Feather Liver brand. So I wanted to understand, would we be looking to set up a separate manufacturing infrastructure for Feather Liver under Silver City, or KDDL would be using its existing manufacturing infrastructure of, say, components in India and the setup that we have in Switzerland, and then would be giving it to Silver City? And the CapEx that you've guided about to 45 crores for the coming year, does that include the CapEx that will be required for this brand?
Ankush, that's a very good question, but if you have any other questions, can you please ask us?
That's the only question that I have.
Okay. So, Silver City Brands is where the development, manufacture, and launch and spread of the Feather Liver brand is planned. Silver City Brands is a Swiss company. It has a Swiss management under the chairmanship of Patrick Hoffman, a veteran and a very, very experienced player. We are very fortunate to have him. It is the goal of KDDL to be involved in the manufacture of watches, and most of it, but not all of it, will happen in Switzerland, because Feather Liver as a brand is a Swiss-made brand, and we will do our absolute utmost. There's no question that we will get away from get away from the Swiss-made heritage and lineage of this brand. The manufacturing itself is a complex process which will happen in stages. At the initial stage, dials, hands, and some other components are already for the launch are being supplied by us. These are partly done in India, partly in Switzerland. And as we go along and we add more components, and eventually the final assembly of the watch will be done in Switzerland. It has to be done in Switzerland for Swiss watches, and the movement has to be produced in Switzerland. Eventually, the goal is to take up all or most of this manufacturing under SCB, Silver City Brands. And capex will be required for it. This current increase in the capital of Silver City Brands is essentially for the requirements of working capital and to be able to launch the brand globally, which is scheduled to be done in the last quarter of this year.
Right. So just to get the understanding right, to start with, KDDL will support Silver City in terms of component and manufacturing, but increasingly Silver City itself would look to create its own manufacturing component and assembly infrastructure. What is the right understanding, right? The assembly and finishing of the watch will certainly be done in Switzerland. Now, whether it will be done within SCB or it will be done with the collaboration of SCB, those are many formats that are open. To what extent will our
manufacturing, our factory in Switzerland, Estima, to what extent that will be involved. These are all things that are open with the structure that has been created. What we do know is that increasingly the manufacturer will be in Switzerland and it will remain a Swiss-made watch. But we can't determine right now that, this part will be produced in SCB, this part will be produced in Estima, or this part will be... There could be the possibility of a joint venture. It's a highly technical part. We are not close to the idea of entering into a joint venture with a Swiss company that has a know-how of that particular part. Right?
Okay, thank you.
Thank you.
Thank you.
Thank you.
The next question is from the line of Ajay Kumar Surya from Niveshaay. Please go ahead.
Hello, Ajay.
Congratulations on good set of numbers. Sir, my question is, sir, on the agent side, sir, in the end industry side, which are the end industries which are we majorly focusing, like is it the aerospace and auto side? And can you throw some more light on what would be the focus area going forward? And we have already reached, and in the previous Concalls during 2018-19 times, we did mention that we want to scale it up to a 500 crore kind of number, and we've already reached around 100 crores this year. So what is the pathway that we are taking to make this reach the guidance of the past?
Right. Ajay, do you have any other questions?
Sir, also one bookkeeping side question. Sir, we have made an impairment loss in Kamla International Holding and Pioneer ISA. So, sir, we just wanted a clarification on that.
Sure. Let me answer the Eigen question, and then I will let Sanjeev, our CFO, answer the question regarding the impairment loss. So, Eigen, our segments for the precision stamping components that we make, electronics, aerospace, alternative energy, and electrical vehicles. These are the segments that comprise 80% of our business. These are growing fast, and we will continue to focus on these businesses. Within these businesses, we believe that segments like alternative energy, electrical vehicles will grow the fastest, and therefore, obviously, they have our highest focus. We also believe that aerospace is something that's going to take off after a gap. Aerospace, we expected it to take off in the last 7-8 years. It has not taken off, but we believe the time is coming now. So we are anticipating high growth over there as well. Our specialization in Eigen is to produce tools and stamp parts of a very high precision, together with other value additions onto that, which could be machining, which could be overmolding, inside interior moldings, electroplating, surface finishing of a high technical specification. And these are all skills and technologies that are either already part of the business or we are now moving to expand technical capabilities to include some of these adjacent technologies within our capability. So with these, we will continue to strengthen our capabilities in our core segment, which is high precision toolings and stampings for the businesses that I mentioned. You're right, we are at a turnover of about 100 crores, and our ambition remains, and it's not only an ambition, we see a very clear runway and a path to grow to a 500 crore business over the next couple of years. And frankly, the potential is quite large. And to grow from 500 crores to a still larger size, I think is very much possible. But as we continue to grow, we will see further horizons and we will see a clearer growth path. For now, from 100 crore to a 500 crore, is a very clear plan going forward.
Sir, just to follow up on this, sir, we had received one global order from an automobile company. So are we currently also supplying, or are we seeing any slowdown in that order, or we have that order size increased? If you can throw some light on that.
I think the order book at Eigen is very strong, and we are not really seeing any slowdown there.
Can you put in any number, like what is the current order size?
I don't think, for competitive reasons, we don't want to give current order sizes and so on. I will say that our order book is strong and we are not seeing any signs of a slowdown there.
Sure, sir.
Okay. Sanjeev, would you like to answer the question about impairment?
Ajay, regarding your question of the impairment, I think if you would have seen our financials, the impairment is mainly on account of the Ashima, where the KDDL holds the indirect holding through the Combined International as well as Selenia in Ashima. Due to continuous losses, we have taken a provision of that in our financials.
Okay.
Thank you, Ajay.
Thank you. The next question is from the line of Bharat Sheth from Quest Investments. Please go ahead.
Hello. Sir, am I audible?
Yes, Bharat, you are.
Yeah. So now coming on, one is the first is on this precision manufacturing, what you say on the bracelet side. Say here, I mean, a key thing will be the yield will be because when you are, I mean, doing machining on the hard road, I mean, or solid road and preparing the bracelet or any other kind of in precision manufacturing on the, so yield is the very, very important for the sustainability of the profitable, make it more profitable. Is that a fair understanding?
I don't know where your question is, but in every business, yield is important.
No, I do understand, sir. What I understand that from the, when you carve out, I mean, your bracelet or anything from the solid road, so normally yield is 10 to 20%, and for which we need a specialized, I mean, in-house designing on the tool, fixture and everything to improve. So what is our capability that we have developed when we are talking of going on a various segment rather than focusing on taking our core to one and expand like either aerospace or EV. So I wanted to get some sense on the whole business perspective.
Okay, do you have any other questions, Bharat?
Then I will come back, please, sir, if I can understand this.
So I don't know. I mean, this requires a very, very long discussion, and my suggestion is that, from time to time, we organize visits to our factories. And it's difficult to explain this and the strategy of manufacturing. These are different businesses, right? So bracelet is a watch component business using steel. Dials and hands is a watch component business using brass. The technologies are different. Eigen is a stamping business using different metals. So it's not easy to compare these. As far as the bracelet is concerned, yes, we are using solid material and the links are created by machining. Yield is very important, and obviously therefore the designing of jigs, fixtures is very, very important. We are serving a global, a collection of global brands who buy from all over the world, including Switzerland, China, Thailand, Germany. We are competing with them, so that's not possible to compete unless we have all the requisite skills of designing, of manufacturing, and the requisite technologies.
Yes, but my question is when we are in these different fields, so how we are developing this technology in-house R&D for engineering capability? If you can give how many R&D engineers we have and how they will take up for this aerospace.
Even if I gave you a number, how is that going to help you? I think we have to judge the business by the results. And we are competing with global companies. These are different businesses and they have different teams. Their different teams are capable, they are competent. That's why we are able to compete internationally. So more than 70% of our business is export to marquee clients. So obviously we have the necessary skills and capabilities and which are developed. That is good governance and management. That's all I can say.
Yes, sir. If you can run through that, we want to take it, our 100 crore precision manufacturing business to 500 crore in next 2-3 years time. So how do we see that whole pie, which segment will contribute how much, and if you can give some color on a roadmap on that.
Bharat, as I already said, we have a roadmap to go to 100 to 500 crore. It's not going to happen in 2 to 3 years. It will take longer. These businesses, with the customers we have, these are B2B businesses. We need to build relationships with the customers They start with products, gradually it builds up. So the timeline is not 2 to 3 years, it's longer. I have said that we believe that a growth at 20 to 25% CAGR is something that is possible, and the roadmap for that is very clear. It's difficult at this time to say exactly which segment. I've told you that the segments of alternate energy, electrical vehicles, aerospace, these are the priority sectors, and we believe these will grow faster than the others.
Okay, great, sir.
Sorry to interrupt you, sir.
Yes.
May I request you to rejoin the queue for your follow-up question?
Sure. Thank you.
Thank you. The next question is from the line of Dhruv Shah from Ambika FinCap. Please go ahead.
Thank you, team, and congratulations for the good set of numbers. Sir, I have 3-4 questions. One, should I tell you all the questions in one go?
Yes, that's better, Dhruv.
Yeah. So one is the opportunity you see in Silver City, and what kind of margins, manufacturing margins can we do? Because on Ethos call, Pranav mentioned that they are going to call for around 1,800 to 2,000 watches of Ferrolobo this year. So I'm just assuming that he mentioned that he will be selling the watch for around 2 lakh rupees in India. So what kind of manufacturing margins are we looking in that brand? That's question number one. Second question is, the kind of margins we did this year, is it sustainable? And if you can just give us what kind of margins you do in the precision engineering. That's question number two. And my third question is on your capex this year and next year, because we have sold some stake in Ethos and we have a good amount of cash on our balance sheet. And my fourth question is, are we planning to sell any further stake in Ethos?
Okay. Let me go quickly through your... So Silver City, again, we're not directly involved in the management of Silver City. I just want to make that very clear. Silver City is a Swiss company. It has, right now it has 100% Swiss employees, and they determine the strategy. We are involved in the strategy, and we know it's going to be a profitable business, but establishing a brand is a long haul. Establishing a brand globally requires a lot of effort, a lot of connections. And I believe the margins in the business are similar to the margins enjoyed by Swiss watch businesses all over. It's easy to see that. You can check the publicly released results of groups like LVMH or Richemont Group or Swatch Group, and you can see the kind of margins in the watch business for successful global brands. It's going to be a profitable business, but if you want to establish a global business, it's not going to happen overnight. It's going to be a 3 to 5 year period to establish the brand globally and then to grow the brand. So, but I believe the margins are going to be nice. What we hear once the brand is established, we can't expect the same margin for the first 2,000 watches as will happen for the next 5 or 10,000. Secondly, again, the roles are very clear. Ethos is involved in the selling of the watches in India. KDDL as a company is involved to support Silver City on manufacturing with our connections, with our expertise on component, which is a very important part of developing any watch. And of course, with our ability to take up further manufacturing, whether at Estima or any other place for supporting Silver City. Your second question was regarding margins. Overall, is it sustainable or not? We believe the margins are sustainable. This year, as I mentioned, we will witness a slowdown in the watch component segment due to the global situation there. And you also asked the comparison of margins between watch component and other components, precision engineering components. The margins in precision engineering components are also very good, but lower than the watch component for the moment. For the time being, that is the case. So we may have a slight decrease in overall margins because the shift of the precision engineering business will grow faster than the watch component business in this year. And therefore, the fact that it has slightly lower margins is going to impact the mixed weighted average margin over there. But I think still it will remain a very, very good weighted average margin. The third point was regarding cash on the balance sheet. Yes, we do have cash on the balance sheet. There are capex plans, both in Eigen, modernization, new projects are on the anvil. But we've used cash that we got from mine also to reward shareholders, and that is also planned for the cash which is on the books. These are discussions that are ongoing right now, and we want to make sure that it's a judicious combination of rewarding shareholders as well as having enough money to be able to invest in the future. And your last question was about the Ethos stake sale. KDDL and mine put together, we currently have about 54% of Ethos. It is our articulated thing that our position that KDDL will continue to maintain a majority stake in Ethos. There is no question. Whether there will be some more stake sale, we cannot say right now, but we will continue to maintain majority. Thank you, Dhruv.
Thank you. The next question is from the line of Neeraj from Damak Capital. Please go ahead.
Yeah. Hi, sir. Thank you for the opportunity. I had two sets of questions. Like you laid out your ambitions around the precision engineering segment, and you see a clear path over the next, maybe 5-6 years to like 500 crores. I had a question that we are already at a very small base of 100 crores. Our balance sheet, there is ample scope. We can lever the balance sheet as well. Like 20 to 25% is still a very healthy number, but can we aspire to grow a bit at a higher pace given that we are at a very smaller base currently? Your thoughts on this?
Okay. What else, Neeraj?
Yeah. And the second question was around, again, margin. So as you outlined that, we plan to grow 20-25% on the precision engineering side, and I understand our watch components business might grow a bit slower over the next couple of years. So do you see the blended margin coming down over the next, I'm not asking about next financial year, but over the course of 2, 3, 4 years as the precision engineering business gains more scale, do we see our blended margins to, taper down a bit over the course of 3, 4, 5 years? Those were my questions. Thank you so much.
Neeraj, excellent questions, both of them. Growth, I think we have the financial muscle and the foundation to grow faster. But the reality of the precision business is that it's not that you install a couple of machines and you switch on the machine and increase the speed of production. It's not like a continuous process. There are several steps that are required. First of all, there is no such thing as a standard product. So every new product requires a development and a research cycle. Secondly, every new customer that we get comes with new products, which require a lot of understanding with the customer, relationship building with the customer. Let us say I get a new global customer. That customer is not going to start with an order of 100 crores. He will start with an order of 5 crores. Then after that 5 crores is developed and supplied, the next order may be 7 crores, 8 crores. Each order for the product to be developed will take 6, 7, 8 months. So that learning curve, that takeoff period is a slow period, and then it grows incrementally. So it requires a lot of care and attention. We believe that the growth rate at 25% CAGR is a scorching hot plate. You have to see it in the context of, you have to project it over 10 years to see what it really means. And I don't have to tell every financial expert knows the power of this compounded growth. Right? The important point is that because growing this business requires such a dedicated takeoff period, it also builds a very strong moat. So once we have established ourselves with a customer, it is very difficult for someone else to break in. Right? So therefore, our goal is really not just to increase and throw money at the problem and, instead of investing 50 crores, let's go and invest 100 crores and we will grow at 50% instead of 25%. We have a realistic view on what is a capable growth. We don't want to grow for the sake of growth. We want to grow in the segments which we are growing, in the segments where we have the strength, high quality, high value, high marquee clientele. Because this is what will ensure our growth, longevity, prosperity, and value over the next 25 years. Prime Minister Modi spoke about a vision for the country in 2047. We are developing our vision for KDDL in 2047. What are we going to look at? And we believe it's an extremely exciting thing. So to answer your question, sorry, I got a little bit diverted. Yes, we would love to grow faster, and when the opportunity comes, we will grow faster. But to say that we will target a 30 or 40% rate of growth, that is not KDDL. We target excellence, we target quality, and as a result of that quality, we get growth. We don't target growth first. We target the excellence and quality. We believe that if we are excellent in what we do, if we are clear about what we want to do, the growth will come automatically. I don't know if that answers your question. About the question on blended margin, I think, it's an excellent question. Margins also change. Right now, we are seeing that the margin in the engineering business is slightly lower. But we also know that when we go to more and more specialized products in the engineering division, the more specialized the product, the higher is the margin. That's the fundamental rule, right? You make a mass Me Too product, you will get a very small margin. You'll get pennies for the dollar. You make specialized products, special materials, special engineering skills, you get high margin. The way we are going, we believe our margins in the engineering business should also increase. If they do not increase and the engineering business grows faster than the other businesses, yes, then the blended margin will come down. If, as we would like, the engineering margins will go up, the blended margins will not come down. However, we believe that, we have an ROC, we have a very good ROC. And any ROC in the range of 25% or more is an excellent ROC. So our goal is not to continuously increase the margin. Our goal is to maintain a good ROC, to maintain robust investments, and to achieve excellence at a global level. We believe that if we can get these three things right, there is nobody who can stop the growth of KDDL, like nobody can stop the growth of India.
Thank you so much, sir. Very well articulated. Just one last request. Can we have this regular quarterly calls or a 6-monthly call going forward as well?
Neeraj, we've got these requests. In our view, our business does not change quarterly. So, anyway, the quarterly results are out, the analysis is there. So, business doesn't change quarterly. This strategy is something which changes, it doesn't even change annually. But of course, annually we must have an update. But what we are suggesting is for serious analysts and observers of our business and our company. What we would like to do is organize at least twice a year, maybe more, visits to our factories where we'll have a full day of discussion, analysis. After you have seen the factories, you've got a feel for what is our business. It is important for all financial people also to understand the DNA of the company and the basic capabilities and challenges of our business and how we are overcoming the business, how we are a group of ordinary people delivering extraordinary results. We would like you to see this, understand this, and in that context, have a full day of discussion than just, on a call like this. So we would like to invite you and other serious analysts and observers to our factories, and there we will have these interactions. And these will be done not only annually, but at least 2 or 3 times every year. And we hope you will join us.
Yes, fair enough, sir. Thank you so much. All the best.
Thank you. Thank you, Neeraj.
Thank you. A reminder to all the participants that you may press star and 1 to ask questions. Ladies and gentlemen, you may press star and 1 to ask questions.
I think Prateek has joined the queue.
The next question is from the line of Prateek Podar, who is an individual investor. Please go ahead.
Hi, Prateek.
Thank you. Hi, sir. Hi. Sir, thank you so much for this opportunity. Sir, I just have 2 questions. One is a bookkeeping question, and the second question is on your strategy. So the first question is, when you called out 45 crores of capex for the full year, for FY'25. Is it only for KDDL or it's for the entire consolidated group? That's question number 1. And the second question was,
that's a quick answer. It's only for KDDL.
Got it. And just a continuation of this, sir, when I look at your CWIP, there is a 34 crores kind of CWIP. Is that the bracelet plant or that has already been capitalized?
That's mainly the bracelet plants.
Okay, got it. Thank you. So the 45 crores is over and above this CWIP amount, right?
The others are already capitalized.
No, the 45 crores which you called out is over and above the CWIP which we see, right? It's the fresh CapEx.
Yes.
Okay, thank you. And sir, just last question is on China Plus One and supply chain reorganization. What kind of discussions are you having with these luxury watch brands? And can that be a material tailwind for your growth ambitions over and above the precision engineering, which has been discussed a lot over the medium term?
Over the medium term, yes, definitely. China Plus One discussion is a very real discussion. And it's not something that, it's not like that suddenly there is a rush of people. Okay, now it's better. Sorry. In the minds of people, it has changed that we have to find alternatives to China. We have to reduce dependence. But the fact is that the Chinese manufacturing infrastructure is extremely strong. So it's not easy for everybody to find that, to find alternatives. However, India is emerging as an alternative. KDDL is emerging and has been acclaimed as an alternative to China for watch components. So yes, we see large opportunities in this segment in the medium and long term.
In discussion, sir, is there a big pipeline for shifting of supply chains which we are seeing in other industries, or the discussions are quite slow given that the entire ecosystem is not yet established in India?
There is a pipeline. There is a discussion going on. By nature, we are a little bit cautious. So we know that we need to go at a certain pace. We've got two challenges on our hand right now. They're not challenges, but two tasks defined for us. One is establishing and fully onboarding the bracelet project. And the bracelet project has enough scope for expansion. I can tell you that. We will probably soon be discussing an expansion plan for the bracelet project. And of course, turning around Estima, which as you know is still not profitable, but it has a huge potential ahead. So for the moment, I'm saying that, at least for the next 12 to 16 months, 15 months, we want to focus very much on this. That said, I'm saying that there is discussion going on for other projects also, but I think that's really going to be coming in after 12 to 15 months.
Fantastic, sir. Thank you so much, and best wishes for the future.
Thank you.
Thank you. The next question is from the line of Vikram Suryavanshi from Phillip Capital India. Please go ahead.
Hi, Vikram.
Yeah, hi. Good afternoon, sir. And I think what we are seeing is a good growth coming in a challenging market to some extent. But just pardon me in case some questions are repeating because I was not able to hear in between. So our dial and hand revenue was around 247 crore for full year. Is that right number?
Dial and hands. That was 247 crore. 247, that's right.
Right. And would it be possible to give breakup between domestic and export?
I think about 70 to 75% is export.
Okay, that's good. And in case of precision, what was the revenue for this quarter and full year?
For the year, it is 95 crores, and for the quarter is around 26 crores.
26 crores. And when we have target to reach to 500 crore, and since this business typically takes relatively longer time in initial phase to really get it to the customer's wallet share, will that growth will be largely kickstart from say 2026-27 onward, or how do we see that will it be like a consistently growth at higher level? And do we need to have a capex for that additional revenue target?
So Vikram, I don't think there's going to be a kickstart as such. I think it's going to be a steady growth. I had mentioned CAGR of 25%. Now, it's not going to be exactly 25% every year. Some year maybe 20, some year maybe 30. But I think an average of 25% CAGR is something that we would aim for. over the next 3 to 5 years, definitely. That's as far as we can see currently. There will be capex required. We need to expand factory space. We need to add some new capabilities. And as the company keeps growing, I think our internal funds will more or less be sufficient for that.
And existing infrastructure would have how much revenue potential?
Vikram, I would like to answer that. I think in the overall sense, we have to understand, first of all, not stick to the 500 as a number. We have given a directional thing that we are targeting for a decent growth and looking for a growth that consistently on a longer period, 20 to 25% growth is possible and it will be achieved. Similarly, as we have shared for the watch component business, the capacity utilization is difficult to answer. Similarly, here in IGAN, if you ask me this capacity can give me what revenue, that's not the right way of looking into that. It depends upon the components and the type of business I am doing. A component may be of 2 paisa, a component may be of 2,000 rupees. So it depends upon the type of business I am trying to focus, the segments which I am trying to focus. But the overall number from the capacity which we have and the modular investments which we have to do in the coming years, it is possible to witness a growth of 25%.
Understood. So I was just trying to get some sense on possible way, will the Bangalore will be the continued place for this precision engineering, or we can expand into other location, or existing facility has surplus land with incremental capex we can go. So I just wanted to get sense on that front to some extent.
We will continue. We are not in favor of expanding to too many locations. We are happy with the infrastructure that has been set up in Bangalore, and we believe that the expansion in the precision engineering segment will happen in or around Bangalore.
Okay, understood. So that was helpful, sir. Thank you very much.
Maybe make this the last question, please, in the interest of time.
Yes.
It will be. Yeah, thank you.
Thank you. The next question is from the line of Manish Podar from Invesco Asset Management. Please go ahead.
Yes, Manish.
Yeah, just one question. So, what is the plan to get into the cases segment? Just if you could, probably help me understand that.
Manish, watch cases is a very important component for a watch, as you know. And again, in India, there is no watch case factory specialized in steel cases, which is what is used in the best brands globally. So we believe there is a large potential. And now we're getting a sense of working with steel through the bracelet project. So I think the building blocks are coming into place. And we believe, definitely not in FY'25, but probably in FY'26, we will move towards setting up, getting into the watch case business. It's definitely part of our strategy.
Okay, fine. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we will take that as the last question. I now hand the conference over to the management for closing comments.
Thank you, everyone. I tried to answer all the questions satisfactorily. I'm aware that there were a few questions in the questions which we've not been able to take up. I apologize for that, but please feel free to write in and we'll try to answer whatever questions might have remained unanswered. You can write to us or to our SGA team, our investment relations advisors. Thank you very much, everyone, for joining this call, and I wish you a great day.
On behalf of KDDL Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.